Snipers, you have to see what's happening in the Bitcoin price today as we are potentially forming an ascending triangle that could take us towards the $60,000 level if this were to break out beyond our price target of the previous weekly open of 57,412. I want to talk about what this would look like if it were to break out and what the confirmation would be, or the potential of this breaking down and what the downside targets could be for Bitcoin. And then we're going to look at Ethereum exactly like we predicted. We are seeing more strength with Ethereum reaching our price target of 1760. I want to talk about what would happen if that 1760 barrier breaks and what it would look like for us to get towards that $2,000 level again. And then we'll look at the Ethereum to Bitcoin chart, because exactly like we predicted in our video yesterday, we are seeing more strength with Ethereum than Bitcoin, and we are now above the previous weekly open, closing 4-hour candles above this area. I want to talk about if this strength for Ethereum will continue throughout the week and next week. And then we'll look at others' dominance as we saw a major dump here, but we are still above this major ascending support level. And then we'll take a look at Bitcoin dominance, but more importantly, the traditional markets like the DXY is still pushing up to the upside. I want to talk about what this means for the cryptocurrency market and traditional markets, because you can see with oil and gold, we are seeing a pullback today, and the traditional markets are acting like crazy with the S&P 500 up and the Euro 100 up over 2%, while Japan, Shanghai, and Hong Kong are suffering in their traditional markets. There is a lot of dynamics playing part today. We have a lot to talk about. You guys are watching the Snipers channel. If you appreciate this content, remember to like this video. First, I want to talk about this imperfect ascending triangle that's forming here for Bitcoin. I say it's imperfect because you can see we don't have a perfect resistance level, but if we were to look at the bodies of these candles, we are forming a potential ascending triangle that if it were to break out, the price target would be just above that $60,000 level. And I want to talk about the upside and downside potential for Bitcoin, because charts are always trying to tell us something, and we just have to decipher what the chart is telling us. Sometimes we can decipher it accurately, sometimes it's a little bit more vague, but the charts are always telling us something. At this point, we are maintaining our price action above the $49,700 support level that I told you guys was a major area for Bitcoin. And as long as we are above 49,700, then the upside potential of the previous weekly open at 57,400 becomes very likely. And now that we have this market structure of a potential ascending triangle forming, our price target is actually going to be even beyond that previous weekly open at that $60,000 area. Now, the reason I have that as a price target is, number one, you can see the major resistance we're fighting right now is 52,000. And really, it's going to be the candle high of this wick, which is right at that $52,640 level. If we were to start closing hourly and 4-hour candles above $52,600, but really it's just going to be right at that $52,000 level, then I assume that Bitcoin is going to have enough strength to at least come to the previous weekly open, but more importantly, possibly even the $60,000 level. And the reason I say that is during a consolidation, there are 3 ways this could go. Number one, we could form a higher high and then continue the consolidation to the downside, or we could come up and form a lower high. The lower high would be the more bullish case, of course, because that would form a bullish flag, while this higher high could potentially form a bearish flag. Now, realize that during a macro uptrend, just because it's a bearish flag doesn't mean it will break down to the downside, but realize that in the midterm, it's going to be important to see whether we want to form a higher high or a lower high if Bitcoin breaks out. Now, realize the third option is Bitcoin comes up and continues beyond that $60,000 level and starts a consolidation above the previous weekly open, and that would assume there's even more upside for Bitcoin and that this consolidation is over and that we will continue to the upside. Now, that would be if Bitcoin breaks out of this ascending triangle, but we still have to address the downside scenario, especially today on Monday, because tomorrow is Tuesday, which we know turnaround Tuesday, markets like to trick, trap, and frustrate traders. And of course, the downside potential is still likely here, especially when we see international markets like Japan, Shanghai, and Hong Kong seeing weakness. We do want to address the downside. And so 49,700 is still the major support area for me. But now when we look at what's happening with the 3 moving averages, you can see we are above all 3 4-hour moving averages, which is a very bullish sign for the short term. If we start to come below 49,700 and close any hourly or 4-hour candles below that, then I believe that this support level has a high chance of breaking to the downside. And remember, this is an imperfect triangle, so that's still on the table. And if this breaks to the downside below 49,700, I do believe the monthly open is going to be the next target for Bitcoin at $45,000, just above 44,800, which we know is a major support. But for now, I am not assuming any further downside. I will address more downside if we start to break down, but I do want to address what the potential could be if we break down from this ascending triangle and realize on the Ichimoku cloud at this point, there's a lot of confluence on this support level, and it's all really determining what the future price action for Bitcoin is going to be. And that all has to do with that $49,700 level, because in my opinion, if we are above that level, I am a believer of 49,700, and I am assuming the chart is telling us that we're bullish above but bearish below for the short and medium term. So that $49,700 level is still extremely key, and you can see how over the last 2 weeks this level has acted as a major level for Bitcoin, and we've seen a lot of support and resistance confluence at that $49,700 level. So that's what I'm watching for Bitcoin. Now realize that we do have this new weekly open. If we start to trend down and close hourly candles below 49,700, that would also put us below the weekly open, which would confirm the bearish case. But once again, that breakout potential would also put us above the weekly open, and that could also confirm the bullish case. And so we're at a very weird point in the Bitcoin price action market, of course, and we really want to watch what happens to that $49,700 level. But I do want to talk about what's happening to Ethereum, because you can see we did break out and saw a lot more strength in Bitcoin at that 1760 resistance area. This to me is also a major zone, just like 49,700. If Ethereum breaches 1760 and starts to close hourly and 4-hour candles above this level, then I believe $2,000 becomes very likely. I believe we'll come all the way up to this previous weekly open at 1933 and even possibly above that to retest this major resistance at 1981. Of course, from there, we're going to be so close to that big even that there's a high chance we could see a wick into 2000 and potentially even a break of this channel. But of course, this will all be determined on what happens to Bitcoin. I think if Bitcoin starts to break out from its ascending triangle, then we'd also see Ethereum break out of this resistance. But if Bitcoin starts to break down, I think that we'll still have to watch this support level on the channel for Ethereum. But once again, I don't know if Ethereum has enough room to come down to form another low at this point. I think we'll see a lot more strength with Ethereum, regardless of what Bitcoin does. Even if Bitcoin comes down and forms another low, I believe Ethereum will find support, at least at this monthly open, to form a higher low to then potentially continue to the upside. And I say that not just because of the technicals, but the fundamentals are clear. In June or July, we are going to see Ethereum become a deflationary asset with gas fees being burned. And of course, you can see with the Ethereum to Bitcoin chart, that fundamental is reacting towards the technicals as we are above the previous weekly open now. And when we look at this daily chart, you can see we are also maintaining price action above the 100 and 200 period moving average. And on the weekly chart, we are now above the 20-week moving average. And we saw a very nice bounce on that 50-week moving average, which could assume that that was the bottom. And now we are starting to see a reversal for the Ethereum to Bitcoin chart. And really the confirmation at this point has already come above the previous weekly open. And so for me, my price target, no matter what Bitcoin does, is going to be at this point 35,500 for the Ethereum to Bitcoin chart. If we start to see this level break, of course, that's also going to confirm a break of the 200 period moving average on the 4-hour chart. At that point, I think we'll come up to the top of this channel towards the 36,500 Satoshi level. And that is the bullish case for now. If we start to see price action below the current and previous weekly open, then of course that would determine that there is a potential for us to see more downside here. And then I would be watching the monthly open at 31,500 Satoshis for a potential bounce. But I would not like to see that happen if we want to assume that this chart is in a reversal. And I say that because at this point, the 100 and 200 period moving average are right at that 32,500 Satoshi level. That's the exact area I told you guys we needed to stay above. And so I'd like to still stay above 32,500 regardless of what happens, in order for us to assume that this is going to continue to the upside with momentum and strength. And so that's the schematics for Ethereum, and then realize with others' dominance, we did reach our target, and exactly like we predicted, we did see a pullback, but we have yet to break this ascending support level, as I mentioned was most likely going to happen. And so as long as we stay above this major support, I am expecting us to see another push to the upside for altcoins at some point or another. But realize that with others' dominance, we are seeing that pushback, and with Bitcoin dominance, we are still showing weakness below the weekly open, below the monthly open, below the previous weekly open, and there is a high chance we see a continuation of downside for the Bitcoin dominance chart, as we do have that potential head and shoulder pattern also forming here on the daily chart. And so we do have to monitor that, because that would assume that altcoins can still see a lot of strength, because you can see we do have this potential head and shoulder that could break us down to the 57.20% dominance level for Bitcoin. And then when we look at the total cryptocurrency market, you can see we are trying to push up to retest the previous weekly open. So we will be monitoring this, because if we start to see upside for Bitcoin, we kind of have that same ascending triangle forming here that would break us out towards the previous weekly open and potentially even form, once again, a higher high or a lower high. And so that could be very possible for us to continue this consolidation just like we did here in January before we saw continued upside. And so I would like to see a lower high form just like we saw in January, because once again, that allows the bullish case to be more consistent. And so I would not want to see a higher high. I'd like to see a lower high when it comes to the total cryptocurrency market cap chart. Now let's talk about what's happening in traditional markets, because this is having a huge effect on the cryptocurrency market and really the confidence in investors coming into new assets right now. You can see we are still pushing up, and unlike our opinion yesterday, I said it wasn't going to happen for sure, but there was a potential we'd see this pullback. But of course, that's not happening. You can see we are breaking out of this channel. So this channel does not become as significant. And realize at this point, we have this 92.62 level as a potential target for the DXY. And if we get to that level, we're going to be so close to the 200 period moving average that is my new target for the DXY. We need to watch this 200 period moving average. Now, I am not too concerned about markets right now, because even though the DXY is pushing up, you can see traditional markets like the S&P 500 is doing well. Bitcoin is not doing too bad. We're maintaining price action above 50,000, which is extremely bullish. And so we have to just take the charts for face value. I understand that because the DXY is pushing up, there is that potential assets could come down. But so far at face value, the chart is telling us that it's not a big deal that the DXY is pushing up. And that is not a bad thing. Realize that when we look at a market like the S&P 500, of course, which is pretty much backed by the US dollar, because most of the liquidity in this market is the US dollar. The fact that the US dollar is strengthening, but even the assets that are backed by the US dollar are also strengthening, is a good sign for the economy, in my opinion. It's a good direction. However, the implications of the strength of the dollar will at some point reflect on the other markets, in my opinion. And so we have to be careful as we approach the next couple of weeks. Now, we will be watching the DXY. So far, because we continued this breakout to the upside as we saw the week open, I am assuming more upside here, and that is what the chart is telling us, of course. And so that 200 period moving average is going to be a huge level for this chart, because if we get above that, then that would be really the strong confirmation that we are going to be potentially seeing a lot more strength for the dollar in the upcoming months. And that is going to be more of a macro confirmation. So far, we broke through the 20-week moving average for the first time since this downtrend started. And so that's already one confirmation. But the second confirmation will really come above the 200-day moving average on the daily chart, because as long as we're below this right now, it could reject the DXY back down to the downside. But if we get above that, then there is that potential this could continue higher. And then maybe that would be the catalyst of seeing some assets come down, because now we have a lot more of some, room to the upside, of course. And so realize that right now with oil, it is coming down while the US dollar is coming up, which is normal garden variety market behavior, but we are above this major resistance level. And I want to address this resistance for oil, because realize this is a major resistance level, almost like when Bitcoin first broke out of 10,000 US dollars, when we broke that major macro resistance. Oil is also breaking this major macro resistance, which is interesting, and it's a puzzle piece on the table because that could assume we see a lot more higher price action for oil, even potentially towards the $100 a barrel price level. And so that could be pretty crazy, in my opinion, assuming that the dollar is also going to continue up and seeing oil continue up. That would be crazy, in my opinion, but we have to just kind of take this lightly for now because this is just developing, and you can see even on the weekly chart we've yet to close a full weekly candle above this resistance level. So we still want to be somewhat cautious, but we want to understand what the chart is trying to tell us. You can see with gold we are breaking down from this major support level. As we speak, we're coming down below this, and that to me is a puzzle piece on the table. At this point, gold's next target's going to be the 100 period moving average at 1650. And of course, if we look at this daily chart, we are below all daily moving averages with a death cross forming, which is already formed with the 50 period crossing below the 200 period moving average. And so that to me could be a sign that storages of value right now are not really investors' priority. Maybe this has something to do with interest rates coming up. Maybe people are flocking back towards the dollar as a safe haven asset. Who knows? At this point, we just have to understand what the chart is trying to tell us. Sometimes we can decipher that, sometimes we can't. And when we look at the S&P 500, you can see we are coming back up, seeing strength to the upside. And when we look at the daily chart, we're back above the 50-day moving average, but we've yet to form any higher highs. For us to form a new all-time high for the S&P 500, I think that wouldn't be as likely just yet. We have to take into account this resistance level, as you can see here. And so at this point, if we see this continue to see upside, then that would be an interesting puzzle piece on the table. I don't know if that's going to happen though, because we look at Japan, you can see we're still seeing a lot of weakness. When we pull up the daily chart, we are just sitting above that 50 period moving average, but the Shanghai Composite is actually all the way down to the 100 period moving average. It saw a very big dump today, down 2.3%. That's a lot for traditional markets. Same thing with Hong Kong, below that 100-day moving average. I think that these are just big puzzle pieces we have to keep into account, because realize that Bitcoin is an international asset, and so these international markets will have an effect on Bitcoin. And it's just weird to me that the S&P 500 isn't seeing that type of price action. Maybe turnaround Tuesday will come and we'll see this come back down. Who knows? Is it the Asian markets that are fooling us, or is it the US markets that are fooling us? Even the Euro 100 coming up to form new highs, but once again, we know the Euro 100 has been one of the weakest markets. And really the trend that we're seeing here, if we were to just kind of, try to decipher what these charts are telling us, is the assets that saw the most weakness in 2020 are now seeing the most strength, right? So the Euro 100, you can see we never came back above the levels before March 2020, and now we're starting to potentially form new highs. This asset showed more weakness than any other traditional market, but now we're seeing this come up, while the assets that saw strength, like the Asian markets, are coming down. The S&P 500 is kind of an oddball here. Yes, we saw a lot of strength, but the NASDAQ really saw more strength than the S&P 500 in 2020. And so when we look at the NASDAQ, you can see NASDAQ is actually down right now. And so that's what this is telling us. It's telling us that at this point, the charts are, very clearly showing that the assets that weren't prioritized during the 2020 rally are now being prioritized. Even oil, it didn't do well initially. Now it's doing well. The DXY obviously wasn't doing well, is doing well now. And so we just have to keep these things on the table as food for thought. It is a very interesting time in the markets, and I am excited to see what happens. I do want to pick a winner for our book giveaway. If you guys want to win one of my favorite books on investing, Trading Psychology, the Bible for Traders, comment below and share this video, and I will pick a winner on our video tomorrow. Now, for our video yesterday, I will go ahead and pick a winner right now. All you need to do is message me on Instagram, and I will go ahead and send you this book. Let's see. We will go ahead and win. Big Fish Sportswear says, thanks for the weekend update, former Ruby, snipers out. You won a book. Send me a message on Instagram, and I will go ahead and get that book sent out to you. And with that being said, guys, as a conclusion, what you guys need to realize is with Bitcoin, we have to be very cautious at these price levels because of what's happening to international markets and what's happening to traditional markets. But at this point, we do have a clear breakout if we come above 52,600. And then of course, 49,700 is still our major support area. If we start to come below 49,700, the monthly open comes back into the equation, and this consolidation area between 44,800 and 49,700 comes back into the equation. But if we start to come up beyond 52,000, really that $52,600 level, then at that point, the sky's the limit. 57,400 will be our first target, but the upside target could be 60,000 plus US dollars for us to form that higher high. So I hope you guys enjoyed this content, and until next time, snipers out.